Good afternoon, everyone, and hope I'm audible to all. So, a warm welcome to everyone. And on behalf of Barclays Gas Securities Private Limited, I'd like to warmly welcome you all to the webinar series Stock Ganudenu, organized by BRS Research. To start off the webinar series, we have our lead analyst, Iranga Fernando, to present PGP Glass Ceylon PLC, Sri Lanka's sole large-scale glass container manufacturer. Iranga has carried out an in-depth study of market dynamics and has explored how PGP Glass leverages its monopoly position, strengthens its export focus, and enhances margins through premium customization. As we dive into the key discussions, we encourage active participation. Your questions are most welcome. Please feel free to submit via the Q&A box, and we'll address them after the presentation. We look forward to an engaging session. So without further ado, I would like to hand it over to Iranga.
Thank you very much, Nusrat. Hope I'm audible to all of you and my screen is visible to all the participants. So on 31st of March 2025, we released our initiation report on PGP Glass Ceylon PLC under theme of harnessing uniqueness and export growth for premium returns. So we have given it based on our valuation, we have derived a target price of 46 rupees and 40 cents, which is upside of 36%, a very attractive upside. So based on the current market price of 34 rupees and 20 cents. So we also expecting the company will pay a dividend of 2 rupees and 19 cents, which some of these return return will be around 42%, including the capital gain and the dividend. So it is a buy recommendation. Without further ado, now let's look at the catalyst actually help us to drive this valuation. So this is a kind of a snapshot of the catalyst. So out of these catalysts, we mainly focus on three catalysts. That is monopoly market position of in the local market, and the increased focus on export and premiumization. So these three catalysts are our main catalysts which drive the long-term value of the PGP Glass Ceylon PS. So in addition to that, there are several other catalysts. There are synergy impact, low gearing profile, and reduction of prices of certain inputs, and favorable impact to rising aluminum prices. So before going into detail wise, before evaluating these each and every catalyst in detail wise, so now let's look at the PGP Glass Ceylon PLC business operations. So when considering about the PGP Glass Ceylon PLC business operation, that is the, just like Nusrat mentioned, that is the only glass container manufacturing company in Sri Lanka. They are manufacturing glass manufacturing facility located in Horna. So in addition to that, they also have another one facility in Nathandi. So in Nathandi, basically they are doing the raw material processing operations, as well as the packaging requirements for the finished products, just like manufacturing polythene, the wood pellets required for the finished good packaging requirements. So basically they are providing the glass containers which are required for the each and every segment, food and beverages, pharmaceuticals, and the agricultural and chemical sector. So in addition to that, they also providing glass containers for cosmetic products. So likewise, they are catering to diverse sectors. If consider about their supply chain facilities, so they do have in-house facilities for mold designing and glass decorating and glass inspection. Likewise, that is a all-inclusive production facilities in PGP Glass Ceylon PLC. So that is kind of competitive advantage for them. And they also depend on the export market. Major export destination is India, like around 30% of their revenue is coming through the export. So when considering about their custom base, just like I mentioned, export market is account for 30%, and local market revenue is around accounts for around 70%. Out of the local market revenue, a major portion is account for beverages. Out of that beverages, 70% to major portion is account by the alcoholic beverages, just like beer, wine, and those kind of beverages. So they also providing glass containers for food manufacturers, which accounts for 15%, and cosmetic accounts for 5%, and farm and agrochemical accounts for 10%. So basically, they are providing glass containers for the corporations, that manufacturing entities, but now they are also focusing on the retail client as well. Now, let's look at each one of the catalysts a little bit detailed manner. So first, I will start with the glass PGP Glass Ceylon PLC market dominance. So the being the only glass manufacturer in the island, so PGP Glass obviously has a kind of a competitive advantage. This is also proved by the Ministry of Industries as per their industry analysis. It is also proved by them. They are the only large-scale glass container manufacturer in Sri Lanka. So being the large-scale only glass manufacturer in Sri Lanka, they're able to cater to the each and every glass required manufacturer in Sri Lanka, just like food and beverages, like Sunquick, Lion, Coca-Cola, DCSL. In addition to that, medicine manufacturers. In addition to that, they are not limiting to the local market. Really, like customers like Bacardi, Diego are one of the prominent export clients of PGP Glass Ceylon PLC. So each and every glass bottle you may see in the local market, most probably coming from their manufacturing plant. So that kind of a very like solid custom base in Sri Lanka, and they are like giving kind of a priority to the local client base. So on top of that, it is not a kind of industry that is very easy to enter into, because it is required regular capex, and you need to like keep on your furnace 24/7 hours, so without any disruption. So it is very energy extensive industry. So it is a kind of a high barrier sector to enter. And not only that, if you consider about their tax, they also have a kind of a tax advantage that protect their business operation from the importers, glass importers. So if you are importing a glass of kind of a capacity of a bottle more than 100 milliliters, you need to pay kind of a high taxes. Even not only that, even for a small bottle, there is a kind of a significant tax portion. So because of that, import glass bottle in the local market become very expensive. The affordability of import glasses kind of it is not easy for manufacturers to obtain them. So not only that, even if we consider about their corporate taxes, they are taxed at 20%, but generally other businesses are taxed at 30%. Why these companies tax at 20%? Because they are kind of a BOI approved company. So that is also kind of competitive advantage. Even if let's say if a new company entered into the same sector, that every company cannot obtain that 20% tax benefit from the BOI, and that is that tax benefit received by the PGP Glass Ceylon PSC for forever. There is no any time constraint to utilize that tax benefit. So forever, their corporate tax remain at 20%. And the next catalyst is the focus on the export market. So if we consider about their uh, export market, they do have kind of a well diversified export markets around the globe. More than 20 countries they are exporting their goods. They are not depending on the single market in a single market like kind of a very concentrate manner, but there is a kind of a favoration on the India. For India is remain as a very consistent and main export market for PGP Glass Ceylon PLC. If you consider about the financial 24 export figures, they have sent around like 60% of their glass containers for India, and Canada also a very good market for PGP Glass Ceylon PSC and very consistent each and every year. They are exporting kind of a considerable amount of glasses for Canada, and the glasses exporting to the countries like Canada, Australia, and USA is generating high margins compared to the exports to the India. So now with this excise duties on liquor and alcoholic beverages, alcoholic related beverages actually led to decline actually led to decrease the demand for the local local demand for the glass containers. So identify that situation. Now glass is trying to more focus on the export market. So currently their export contribution to the top line is around like 30 to 35%. Even last few years, it actually remained within 30% level. So now they are trying to increase it into 40%. So better manage of the capacity, identifying the with the local demand reduction. So they are trying to more focus on the export segment. So within a very quick period of time, they have very high adaptability compared to like other business. Within a very few days, they can focus on their they can focus their excess capacity to the export market without taking much time, because they already have established markets. They already getting enough orders from the export market, because of they are giving priority to the Sri Lanka, because that is one of their target. Because even though so many export orders are coming to them, they are giving kind of a priority to the local market. They never want to lose their local market. And what is their management is saying is some of the local clients remain with them within the company inception onwards. So because of that, actually they are giving kind of priority to the local market. But if the local market get into decline, they can very easily convert that excess capacity to export market without any kind of any kind of hectic process. So even that was a kind of a practice over the years that followed by the PGP Glass Ceylon PSC. Whenever the local market demand highly declining, therefore they are using that excess capacity for the export market. Further, they also have kind of a excess capacity too, not because of local demand declining. Even addition to that, there are a few kind of capacity. So now they are focusing on how to effectively utilize to earn additional income from export using that excess capacity. And India always kind of just like I mentioned earlier, it is a kind of a very consistent and very main export market for PGP Glass Ceylon PLC. And there are further opportunities in the Indian market. You know, if you like analyze about their recent alcoholic beverages consumption data, you will realize that actually their demand for the beer and Indian made foreign liquor is actually very high. Even now, social and other regulations are somewhat restrict in certain areas of India regarding the consumption of alcohol. So with that, even there are favorable macroeconomic conditions they do have a strong GDP growth, and the middle income class population is increasing. They're also focusing on the exporting the Indian-made liquor to the other countries. Currently, it is around like 350 million USD business, but they are targeting it to increase to 1 billion. So likewise, there are a lot of opportunities in India, further grow for further giving opportunities for PGP Glass Ceylon PLC. So PGP Glass Ceylon PLC actually in a position to utilize these opportunities because their parent company, PGP Glass Private Limited, a well-established company in India that is also involved in manufacturing glass containers. Not only that, their focus never limiting to one destination. They are aggressively doing marketing campaigns, promotions, and participate into exhibition in where that take part in various part of the world. So each and every year they are doing this regularly, not limiting to like certain period of time. If we consider about the 2025, it's still just 3 months ended, but within that 3-month period, they already done foreign campaigns like around three foreign campaigns, especially in France. They have done a big one. Even UAE, India, Italy, France, so USA. So generally, they are doing these kind of promotional campaigns to further expand their export market, and we are seeing those results are coming off. If we consider about the last third quarter of financial 25, their export volumes has increased by 80% compared to third quarter of financial 24. So that is a kind of improvement. And we are expecting going forward, the export sales volume will further grow. Now the moving on to the third catalyst, that is the premiumization, which is now which is a kind of a advantage given to the PGP Glass Ceylon PSC to increase their price increase their price growth. So what is premiumization in alcoholic beverage market? So it is a kind of very simple thing. That is instead of drinking a kind of very low level alcoholic beverages, now people are trying to buy high quality, very premium level beverages, alcoholic beverages. So even from the data obtained from the Bloomberg, we have seen that trend. So these kind of when manufacturing these kind of premium level liquor, manufacturers are trying to obtain premium level glass bottle to give customers a kind of a perception. Even the packaging itself, this liquor is a kind of a premium. So customers, even from packaging, customers will feel, yes, this is a kind of a premium liquor. So because of that, now liquor manufacturers need tailor-made glass packages, very high level, or very kind of having kind of a very aesthetic value, having premium level glass containers. So for that, actually, PGP Glass Ceylon PLC has every facility that can manufacture customizable premium level glass containers. I hope if sometimes you may be aware, that is one of the glass manufacturers in the region, in the Asia Pacific regions, which has glass decorating facilities, in-house designing facilities, and color printing facilities, and all the other inspection facilities under one roof. So even though there are so many glass manufacturers in the region, it is hard to find out that that having a glass manufacturer that has every facility under one roof. So PGP Glass Ceylon PSC is a kind of a glass manufacturers that has every facility that can manufacture premium level glass containers. So the next impact is coming from the rising aluminum prices. Even though the last couple of days there were kind of few declines, hope you can remember even within the early month of the 2025, we have observed kind of aluminum prices in a rising trend. Even if you consider about the global packaging industry, there are like several alternative to glass packaging. Aluminum can is one of them. So with this rising aluminum prices, what will happen? Beverages manufacturers are moving to other alternative manufacturing packages. It could be a plastic bottles, or it could be glass bottles. So likewise, beverages manufacturers shifting their uh, packaging needs to other packaging materials instead of depend on the aluminum prices in this kind of when in a situation where aluminum prices become excessively volatile. So that is also kind of an advantage for the PGP Glass Ceylon PLC. And another thing is the recent I have observed decline in input cost that related to the PGP Glass Ceylon PLC. Uh, before discuss that, just we have idea about cost of sales composition of PGP Glass Ceylon PLC. So then we can have a better idea about how this declining input prices benefit to the PGP Glass Ceylon PLC. If we consider about the PGP Glass Ceylon PLC, cost of sales composition, majority is account by 35%, and the rest is 25% accounts by the raw materials, and 20% each are reported by the labor and other overhead cost and the maintenance cost. So there is no kind of uh, limiting to one that highly concentrated on one input, just like energy or raw materials, giving high excessive concentration on that. So it is kind of a well diversified cost of sales composition. However, for energy, there is a high focus. It is required like out of the total cost of sales composition, 35% represent the energy part. So other than that, if you consider about the raw materials, almost all of the raw materials are sourced from the locally, but the soda ash, the most essential raw material for glass manufacturing. So it is need to be imported from foreign countries. That is, it could be importing from China, India, Pakistan, and Turkey. So all the other raw materials are abundantly available in locally. So if we consider about the soda ash prices within the recent period of time, we have seen a kind of a declining, and that declining trend is still continues. So it is a benefit for the PGP Glass Ceylon PSC. It will help to maintain their gross profit margin, and we hope this declining trend of soda ash prices remain to be continued in upcoming period too. One thing is one reason for this decline is one thing is oversupply and the less demand at this moment. But still, it is somewhat high. Prices are somewhat higher than the pre-COVID levels. And electric out of the energy requirements, so I have mentioned 35% represent the electric energy cost. Out of this energy requirement, like around 25% is coming from the 25% is required coming from the electricity. So out of that 20% requirement, energy requirement, a part is sourced from their solar cables, so solar panels, but that is not a very big part. That is very out of the total electricity requirement, that is around like 20%. Rest of the 80%, they are sourcing from the Ceylon Electricity Board. So if we consider about the latest CB electricity prices for the industries, so we recently saw a reduction of 30%. and this benefit will reflect on their PGP Class 11 PLC financials in the upcoming periods. And they also using LPG as an energy source. That is their main energy source. Other than that, they also using furnace oil. But now they are using furnace oil very not very excessive way. They are trying to minimize as uh, possible in every way, because considering the environment impact. But LPG usage is very high. Out of the total energy requirement, around like 70% is coming from the LPG. LPG, they are sourcing from the local sources, just like LAFs or Litro, but their price formula based on the Saudi Aramco LPG prices. Uh, Based on the Saudi Aramco LPG prices, LAFs and Litro deciding their selling prices for the PGP glass Ceylon PLC. So within the recent period, we haven't seen a kind of major volatilities in the Saudi Aramco LPG prices. And moving on to the furnace oil prices. So as you can see, there is a kind of a steep decline over the period of time in furnace oil prices. But unlike other other energy sources, just like providing by the CPETCO, just like petrol, diesel, uh, just like other fossil fuels, CPETCO prices are not varying that much. Every couple of months, CPETCO is revising their diesel prices, petrol prices, but the furnace oil prices is somewhat not changing like that way. That is very like restricted to a certain price limit. So we are expecting even the furnace oil prices not change that much within the short period of time. Within the short period of time, but longer period of time, yes, obviously there could be a price changes, and we have account those price changes when analyzing our when building up our DCF model. In addition to that, now they are trying to use cullets. Cullets means the recycled glass pieces. So whenever they increase in 10% of glass cullets, the energy requirements for the electricity furnace oil LPG can be reduced around 3 to 5%. The next catalyst is the synergy. This synergy is we are identified because now PGP Glass Ceylon PSC belong to a PGP Private Limited, which is a well-established company in India. Not only that, they also have kind of a fellow companies in PGP in USA, which is PGP USA. That is also glass container manufacturing company. In addition to that, their PGP Glass Ceylon PLC ultimate parent is Blackstone, which is a kind of an investment firm in USA. So likewise, they do have synergy benefit in they are getting synergy benefit in certain ways. One thing is they will never going out of stock, or they will never face kind of a production disruption or their output scarcity because of the support coming from the PGP India. So let's say there is a deadline to meet to provide some kind of a glass containers. So, but due to their production incapabilities, or due to any kind of situation, if they couldn't manufacture those glass containers, they can simply obtain it from PGP India or PGP USA. So that is kind of practice of them. If you look at their income statement, under the revenue breakdown, you will see a line item called trading. Actually, that trading part is represent this kind of sales happening in the PGP Glass Ceylon PLC. Not only that, they also have sales offices around the world. But to maintain this office, sale officers, then they no need to like pay any additional amounts, because those sales offices are completely maintained by the PGP India Private Limited, which is the parent company of the PGP Glass Ceylon PSC. So without spending much cost, they can maintain the relationships with foreign clients, which is based on every part of the world. It could be USA, it could be Europe, it could be Middle East. They do have several sales offices and also production plant in different places around the world. So that is a kind of a synergy impact for the PGP Glass Ceylon PLC. And specialization. Now PGP Glass Ceylon PSC is specialized on premium glass packaging manufacturer for more focus on the food and beverage segment. Even though they are preparing glass containers for cosmetic products, pharmaceuticals, and agrochemicals, their core area is a food and beverage segment. On the other hand, even though the PGP India also have production plants that can manufacture glass containers for food and beverages, their specialized area is cosmetics. So PGP India can produce cosmetic related glass packages very effectively and very attractive manner compared to Sri Lanka at very less cost. So in such situation, PGP Glass Ceylon PSC generally doing kind of a cost evaluation. If some kind of a cosmetic glass container manufacturing here, maybe sometimes if it is very costly, then importing from India, they are taking that is as an option. They are importing cosmetic related glass containers from India rather than manufacturing here. So there are kind of a specialization benefit coming through this synergy impact through. So moving on to the next catalyst. So the next catalyst is the low gearing condition of the PGP Glass Ceylon PLC. If we consider about their PGP Glass Ceylon PLC financial, you may realize that from financial 19 to financial 24, in financial 19, their gearing ratio was around like 81%. Now it is coming to, now it is almost 0%. At this moment, they don't have interest bearing long-term loans or interest bearing short-term loans. So that this will create kind of a capacity to obtain funding sources from the funding sources as a bank loans to if they need to do kind of a expansion, or if they kind of do kind of refurbishment, they can obtain debt funds without any hectic, and they are actually well preparing their balance sheet for the upcoming furnace realignment, which is due on financial 28 in terms of calendar years. That is calendar year 2027 month of July 1st. So they are planning to do this furnace realignment in at that time. For that, actually they must go for debt financing because their company internal generated funds are not enough for that finance realignment process. So at that time, without any worries, they can go for the furnace realignment through the debt financing. Now let's look at their financials very brief way, as well as the projections we have made for the PGP Glass Ceylon PSC for the upcoming period. So this is a kind of a very brief snapshot that I have taken from the my initiation report. In initiation report, you can have detailed data on this financial analysis and projections. Let's focus on their revenue. So in upcoming period, if we consider about the historical performance for the financial year 14 to financial year 24, their top line has grown at 10-year CAGR of 13.1%. Within the period of financial year 25 to 28 period, for the 3-year CAGR, we are expecting their top line grow at a 3-year CAGR of 13%. So we are out of that, the sales growth will we are expecting their sales growth will mainly driven by the export segment. And when we are forecasting the revenue, actually we have taken two variables. One is the average selling prices per metric ton, and the other variable is sellable volumes produced. So based on those two variables, actually we have done this forecast. So in addition to that, we have taken account so many other factors to exchange rate and inflation. So those kind of things we have taken into account. You can take an idea on that on reading our initiation report. So if we can consider about the average selling prices of the local market and the export market, compared to the local market, we are expecting export price which can obtain for metric ton of packaged glass can be increased at a higher rate within the upcoming period. For the financial 25 to 28 period, we are expecting CAG of 12%, but in local market, we are expecting CAG of 4%. But this company actually has a high capability to pass their increased cost to the local clients. Then they are following kind of a cost plus profit, cost plus margin price mechanism for the local market. So they can very easily pass their cost to the local market. Even if you consider about their top line, you will realize for the let's say for the last 20 years, from financial year 3 to the financial year 24 period, around 20 to 21 years, they're able to sustain their top line. So over the last 20 to 21 years, they have experienced annual decline in top line, just only 2 instances. One in financial 14 and the other one is last year. So likewise, they do have kind of very sustainable top line. So maybe they can increase their top line from a volume increase. Even sometimes they have increased their top line and earnings through the price adjustment. So likewise, time to time, even they are improving their product mix. So likewise, they have kind of a high capability to sustain their top line and bottom line compared to other business. And we are expecting profitability to remain strong in upcoming period. Even within the recent financial years, we have seen with the growth of the business, their bottom line also improve over the time, and their margin also very sustainable level. Gross profit margin is remaining around 30% level, and the even the EBIT margins are remaining at very sustainable level. So we are expecting to now from the financial 24, EBIT margin is around 22%, 22.1%, and by financial 28, we are expecting it to increase to like 27.1%. So because we are not expecting kind of a big volatilities in their administration expenses, distribution expenses, so we haven't seen that kind of volatility except in financial 22 and financial 22 and 23, because due to this inflationary conditions and COVID condition, actually this operating expenses has increased. Not only operating expenses, cost of sales also increased. But in parallel to that, more than that increment, actually their top line actually increase a lot, and they're able to, despite the adverse impact, they're able to sustain their profit margin. So likewise, their operations are actually very solid compared to other business. And another thing, actually one of the reason that I'm recommending it to the investors, this PGP Glass Ceylon PLC, is they do have a clear payout policy. Generally, they are maintaining over the past years. If we consider about, they maintain a 50% payout ratio, except in financial 22, actually they couldn't maintain that due to various external pressures. But all the other years, actually they have maintained a good payout ratio, which is around 50% level, and they are expecting to do so, but that is depend on their board of directors decision. But we are expecting they're able to maintain this payout ratio even in the upcoming period. So with the earning per share growth, so the profit, the dividend which received by the which expected to receive by the investors will also go up. And where liquidity is another thing that we have to focus on very thoroughly when investing a stock. If we consider about their current ratio and quick ratio, those are actually at a very sufficient level. But we have to be a bit mindful because they are, if we consider about their business nature, by nature itself, it is kind of a very keeping very high level of inventories. They also have a very high level of trade receivable, but they actually they have kind of a very effective collection policies. But for export, like they are giving kind of 90 days period for collection for the receivables. So likewise, they are giving kind of a trade receivables days are somewhat high. So that is the nature of this business, and sometimes they are manufacturing certain glass containers that required by their customers uh, at within a certain period of time limit within the year, and they are keeping those inventories. Sometimes they are manufacturing their clients' annual entire requirement within a certain period of time, and they are storing it in PGP Glass Silicon PLC own warehouses and keep it then until their clients require it them. So for an example, for beer containers, they are following such kind of practice for 45 days. They are continuously manufacturing amber colored bottles, and then they are keep it under their warehouses based on the requirements they are issuing it. So understanding this situation, without limiting to a current ratio and quick ratio, we also conduct the cash ratio evaluation. So under that, we are seeing kind of a low level of cash ratio, but that is obvious. But that even that won't be a kind of a issue for the PGP Glass Ceylon PSC. Even cash ratio is remaining at a kind of a sufficient level because PGP Glass Ceylon PSC never uh, it is very kind of they are not focusing on obtaining loan facilities. Even for their regular capexes, they are using their internally generated cash instead of keeping their cash idle. They are trying to utilize their cash very effective way. So if they don't have anything to do, even they pay their cash as a dividend. So likewise, they will never use those their internally generated cash idle. So that is one of the reason the this very low level cash ratio, but it won't be a issue at any time because that is because they will never keep their cash idle way idle way. Instead of that, they are trying to invest. Even they have done a kind of improvement in their capexes. They have done a spray. They have built a spray coating machine and done some modification even during the financial last financial year too. That completely done through the internal generated funds. So, so likewise, their liquidity level at satisfactory level, even for the 9 month of financial 25, we are seeing all the liquidity ratios are improving compared to 9 month of the financial 24. Even if you consider about the cash balances, now cash balances are at a satisfactory level. Now let's move into the valuation analysis of the PGP Glass Silicon PLC. So basically, we have used a dividend DCF valuation model So we have give high weight on the DCF valuation. Other than that, we also use P multiple and dividend discount model. So for these are some assumptions which I have used to calculate track. For the risk-free rate, we have taken 10.91%, which is the 8-year treasury bond average rate in the secondary bond market as per the CBSL data issued on 28 March. And the for beta, we have taken, considering the long-term perspective, a 5-year beta, both stock prices, PGP class and PSA stock prices, and the ASPI. So we are getting a 5-year beta of 1.01, and cost of equity is at 18%, calculated using the CAPM formula. And the even though now they don't have kind of interest bearing borrowings other than the small portion of bank overdrafts, previously their practice was to obtain loans from the local market based on the AWP PLR level, but their maximum interest rate cap was around 90%. So that is the PGP class loan PSC past practice when obtaining the loans. So I have used the same cost of debt for the even when conducting the DCF valuation. So debt to equity ratio, we are forecasting debt to equity ratio to remain at 5% level for the upcoming period. And based on DCF valuation, we have derived intrinsic value of 51 rupees and 80 cents for the financial 26, and for the financial 27, 54 rupees and 80 cents. And our DPS forecast was around 2 rupees and 19 cents for the financial 26, and for the financial 27, it is 2 rupees and 54 cents. So based on the total return, we are getting a target total based on the total return, we are getting target price of 54 rupees. This upside is based on the our intrinsic value of 51 rupees and 80 cents. That is a 51% upside from the current market price, and 60% upside from the financial 27 based on the current market price. So the total return is both the capital gain plus dividend is amount to be 58% based on the current market prices for the financial 26, and for the financial 27 it is 68%. So we are giving kind of attractive value through the DCF valuation. We have done a very conservative analysis, but despite that we are getting very attractive returns. So P, if we can, when considering about the PE based valuation for the financial 26, we are getting a target price of 33 rupees and 65 cents. For the financial 27, we are getting a 39 rupees and 27 cents. So it is from the current market price. You can see for the financial 27 only we are seeing kind of upside. That is 14.8% upside. But for the financial 26, there is slight decline. And focusing on the dividend discount method, because we also try to incorporate dividend discount method, because company has a kind of a clear and consistent dividend payment policy. So based on that, we are for the financial 26, we are getting a 34 rupees and 40 cents target price, and for the financial 27, we are getting a 37 rupees and 70 cents target price. So for the financial 26, based on the current market price of 34 rupees and 26, it is a 0.6% upside, and for the financial 27, it is a 10.2% upside. And after that, after obtaining target prices for the each and every like DCF valuation target price and the other PE based and dividend discount method, we use a kind of a weighted average method to derive the target prices. So based on our weighted average target price, just like I mentioned earlier, we have given high weight on the DCF, that is 70%, and PE and dividend discount method we have given 50%, 15% each weightage. So based on that, we are getting a target price of 46 rupees and 43 cents. So after rounding it off, we are getting a 46 rupees and 40 cents for the financial 26 and 49 rupees and 90 cents for the financial 27. So, so this is the overall calculation, return calculation. So we are getting a upside of 36% based on the current market price, which is today market price of 34 rupees and 20 cents. And also 46% very attractive level return for the financial 27 from the current market prices. And total return, both capital gain plus dividend, which is a 42% return. And for the financial 27, it is a 54% return. So there are sufficient return coming from the this PGP Glass Silicon PSC based on our valuation. So we are recommending it to buy. We not only the positive factors, we also need to be a bit cautious about the what kind of risk we could be faced by investing in PGP Glass on PST. So it is good for everyone. So there is actually kind of a customer concentration risk. So why I'm saying so? Out of their total product portfolio, if you can remember, I show you, I have demonstrated. So out of the total finalized products, around 70%, 70 to 75% is focused on the food and beverage sector. I mean the overall, both local and export. So the something happened related to the global liquor demand or beer demand or any other kind of food demand that is directly impacting into, there is a high potential of impacting into the PGP Glass on PSC. But PGP Glass on PSC also into, so how this risk mitigated by the PGP Glass on PLC. So what they are trying to do is they also into other product categories, that is pharmaceuticals, chemicals, and cosmetics. Also, they are continuously focusing on diversifying their geographical locations, all the markets, expanding through the like finding out new export locations. So at least by doing that, they can, up to some extent, they can reduce this customer concentration risk. And they also have production disruption risk. So due to kind of a technical disruption or the material shortages, they could be there is a possibility of going out of stock and unable to satisfy their clients. So how they are mitigating that risk in case of inventory shortages? So what they can obtain glass containers from their parent company, as well as the fellow companies just like PGP Glass USA. So in addition to that, they also have foreign exchange risk. So since they also involved in foreign export related business, and very like excessive level volatilities in energy prices also could impact the PGP Glass PLC performance. So those are the main risks which I can explain to you. So with that, my presentation ends up. So thank you everyone for participating for this PGP Glass on PSC initiation presentation. Now let's start the Q&A session. So if you have any questions, now you can direct that question to me.
Thank you, Ranga. Thank you for that very comprehensive presentation on PGP Glass. So we have our first question for you. What are external pressures, or what external pressures does PGP Glass face in the near future, which would impact its profitability? So that's the first question to you, Ranga.
So the basically the external pressures are generally coming from the let's say if our currency significantly started to appreciate, then that is a kind of adverse impact. There is a kind of adverse impact to the PGP Glass on PSC, because now when they entering into a kind of agreement with foreign clients, generally they are entering entering in focusing on long term. So when deciding the glass container prices, they actually considering the prevailing exchange rate too. So when suddenly if our exchange rate started to appreciate continuously, actually that is adversely impact on the PGP glass on PSC export revenue. So other than that, excessive volatilities in the global LPG prices. If the suddenly soda ash prices begin to increase very high levels, so there is adverse impact to the PGP glass on PSC. In addition to that, now recently there is a discussion about this tariff the imposed by the USA. However, this tariff imposed by the USA has a very minimum impact on PGP glass steel on PSC because even I will show you. So if we consider about their export market, depend on the USA is very minimum. So even they do not need to depend on even India, but because they are giving priority to India even because their parent company is one of the prominent glass manufacturer in India. Because of that, actually they are giving kind of focus on the India. So other than that, they are getting sufficient orders each and every year in the export market. So even if the even in the USA tariff scenario, if it is adversely impacting to the PGP class steel on PSC, very easily they can focus on other export destination. Unlike sectors like apparel, we are not very very highly depend on the market like USA or any other market. Even if you consider about the overall glass ceramic exports, which is predominantly driven by the PGP glass on PSC, they do have a kind of a very diversification in their export destination. So even in this USA tariff conditions, I don't think there will be a kind of a adverse impact to the PGP glass on PLC. So those are the adverse impact coming to the PGP glass could come to the PGP glass on PLC, and they are well prepared to face those kind of adverse impact. So that's what I can say.
Okay, Ranga, thank you for answering that. And Shankar, hope Ranga answered your question. So you can maybe we can take a few other questions. So until then, also Iranga, one other question. So you did say that any decline in the local demand can be met through export growth. So likewise, if there is some impact on the export growth, because you said that export growth does have or does capture the premium margins. So in that case, if there is a decline in export growth, can the local market cater to the demand that is needed for future growth?
Okay. But this is kind of a very tricky question. Yes. Yes, I mentioned that PGP glass on PSC is focusing on the export premium segment. Yes. Especially the containers sent into the Canada, which is basically they are sending it to the like flavored water bottles manufacturer. So those are really like high margin generating products. Even for the USA, they have recently done a kind of transaction, done a sale for the manufacturer called Sazerac black color glass bottle. Those are generally generating high margins. That's true. But for a market like India and for the countries like Angola, Mexico, or even for the Maldives, there is a customer portion which importing like normal flint glass bottles. Even in those countries, there are customers where buying the premium level glass bottles. But they also have customer base which importing only the like very basic level glass bottles, like very standard level 1 liter or like 500 milliliter level, like glass bottle or very small level like below 100 milliliter level flint glass bottle, that is not very kind of a very premium level. So in such scenario, instead, if those premium segment uh, cannot capture by the PGP class, if they fail to capture that market, they can focus on the this uh, like low premium level segment by manufacturing more volumes, so they can meet that demand. Uh, but I have to say another additional thing. Like though they are getting so many orders, actually PGP class loan PSC taking only part of the export orders they are getting from the clients, because they also consider margin. They also consider what is the margin they are getting. Also, they are focusing on the local market. They never like they never like reduce supply into the local market. So they are always giving priority to the local market. So without losing the local market, they are always trying to export. So if the premium level market segment drops, they can use that additional buffers, the demand coming from the Vietnam, Maldives, for the like India, for the like normal flint glass bottle, they can produce and sell. So I hope I have answered that question.
Yes, Iranga, thank you. And I think we will move on to our final question for the day. So we know that glass doesn't have any direct competitors in the local market, but when you do compare its relative valuation with regional peers, where do you see glass now and where do you see glass going forward?
Yeah. If we consider about the PGB glass PE for the trailing 12 month is around like 10.1 times, even though the price to book value is above 1. So, but in if because now there are no kind of a direct peer or direct competitor to analyze in the local market to get a better idea. So for that, even in the report I have mentioned that I have done a kind of a peer analysis for the re, for the re, for the region. So considering companies like Indian based several listed glass companies and Thailand based companies and Bangladesh and Pakistan companies. So based on that, almost all the Indian companies and Maldives companies actually had a very high PE, like 16 times, 20 times. Even their price to book value is very high, like 4 times, even some are 10 times. So uh, considering that, I feel that this is a kind of sector which has very high PEs, very high price to earning ratios, and very high price to book value ratios. So except Pakistan company, so almost all the other like even Bangladesh company also has very high PE multiple. So I think it is something very common to this sector.
Okay, Ranga, thank you very much for the comprehensive presentation that you did. I truly hope that everyone joining in today's webinar found it very useful, and we are happy to hear your feedback. Please do write to us at research@bartlettrelicare.com on how we can improve our further webinars and how we present it to you. Just also a kind reminder, so we have an entire week of webinars lined up for this week. So tomorrow we have Distilleries Company of Sri Lanka PLC, followed by the NBFI sector presentation on Wednesday, and we hope to conclude with CIC Holdings PLC on Thursday. So please do not miss out on this opportunity to get an in-depth analysis on these stocks. and sectors. And don't forget to register via the registration link. I hope, yeah, it's here on your screen. So please do register and please do join these webinars. I'm sure it will be very insightful for you too. So wishing all of you a pleasant evening and hope to see you tomorrow. Thank you.
Thank you.